Yeah, it's in the agenda package. Oh,
Good morning, Mr. Commissioner. Okay, yep. So this is our fund balance. Again, we try to report on a general fund mainly, as well as other governmental activities. So the fund balance general fund, again, increase in 30.9 million. As you can see, this is our nice trajectory for last almost 10 years that I've been with the county. So that's a very healthy fund balance. Overall fund balance, cumulative fund balance is almost 419 million. So that's out of that 371, which is unassigned. And I'll have another slide to go through a detail, which is unassigned, restricted, another category, so to speak. At the end of the fiscal year, as you can see, we have a more than $1 billion fund balance. Now that's includes all the governmental funds. The second one was the general fund, second bullet, but third one is all our governmental funds. And one of the just increase happened because of property tax, almost went by 13 million, grant 16 million, investment earning again, market was good with us, 15 million. And again, sell tax and excise tax and everything because of the economy, I think just going on an upward trend. Okay. I'll move to the next slide, please. And this is where, as I just mentioned, the breakup of our governmental fund balance. Non-spendable, again, non-spendable means we can't touch that. So those are something like inventory or prepaid. Some of the nowadays IT contracts works like 2 to 3 years because they get a much better rate. We pay like 2 to 3 years in advance. So those are prepaid, and there are some other funds. We might not have enough fund balance or cash. So again, general fund has to subsidize. So that's what we call it a non-spendable. And another category, restricted one. Restricted has, and I will just read from here. I think environmental programs, 18 million, opioid settlement. As you can see, we have been getting a lot of money for opioid settlement too. So that's, again, it's a part of our restricted money, health care, and same thing, inpatient hospitalization. Some of them like a judicial too this year's because some of the grants came, was a different treatment was given, but because we were not able to utilize this year, so that became a restricted money. Indigenous defense is almost a $30 million, and so and so. So those are restricted category. I mean, I'll be happy to share some of the detail, but this is, I'm reading from my notes. Committed is always a Third Circuit Court, because we have agreement with Third Circuit Court, plan A, plan B, how we work it out at the end. At the end, we work it out and say, okay, here's what the committed fund balance. And you have an unassigned. Okay? Can you move to the next slide, please? Sure. Any questions?
Commissioner Kling.
Good morning.
Good morning. Good morning.
Can you give the general definition of assigned versus unassigned? We got unassigned money sitting around, 370 million of that. What is that?
Unassigned means it's unrestricted. Assigned is we have to come to this body, commission, if we have to unassign that portion from assigned. So assigned is internal restriction, so to speak, versus unassigned is unrestricted.
Yeah.
Totally. Okay.
So where does that money sit?
It's still sitting in general fund.
Sitting what?
Still sitting as part of the general fund, right? But what we
and then to move it out of unassigned?
Unassigned is very unrestricted. The assigned, I'm talking about assigned. Hopefully you're asking the assign, right? If something is an assign, if you want to unassign, then we have to come to this body, to the commission to unassign. So that's called an internal restriction versus restricted money is there is an external party restriction. That's the difference between restricted, assigned, and unassigned.
So Well, go ahead. Yeah.
So for the unassigned, for it to become assigned, the commission would have to appropriate those funds.
Yeah.
Right
That-
now, they're unassigned. So once the commission appropriates to a project or a category, it becomes then assigned.
It becomes assigned. How's that different than restricted? I mean, if we approve money out of unassigned for, contract of some sort, um, isn't then that money restricted for, it can only go to that?
Again, most important factor here is restriction comes from where? If it's come from an external party, then that's called a
Extra
restriction. So like opioid, right? There's a
Yeah.
restriction in a
Money
contract
we're
that
getting from the state or the
Yeah.
feds.
you can use for a certain purpose. So I cannot use for a general fund, general purpose for that opioid money. It has to have specific activities they're described in there, right?
Yeah, it might be. But once the commission approves some unassigned dollars, it goes to assigned. It comes in that category then? Because
If
that money's been assigned?
if there are certain projects commissioner wants to assign, or if administration comes back and say, here's what we have in a, these are the things we want to assign, then yes, we can come to this body and put a restriction in there.
And then-
I'm saying assignment, sorry, not
And
the
then once the money makes it to assigned, that's where it has to be spent. It can't be used for anything else.
That's correct.
Okay,
Mhm.
all right. Thank you. Thank you,
Okay.
Madam Chair.
Thank you. Can you move to the next slide, please? Okay. So again, this is in a general fund. Overall, general fund revenue increased by 64 million, almost like a 10% from prior year. And some of the reasons are property tax went by 13 million, 3.8% from prior year. Charges for services, net of internal general fund charges, again increased by 22 million. And that's, remember, charge of services works is, right? A lot of costs right now going on with our ERP systems. So what ERP systems, we have to charge it out to entire county department, but we have to give them a revenue too at the same point. So that's where through the chargeback, those are charges for services are higher. I'm expecting this is going to be higher this fiscal year too, because still ERP is in a full fledged. Hopefully it can, go down next year going forward. Once we go live October 1, okay? Then we'll have all the supporting licensing cost as well as Oracle support and so forth. Another one is interest earning. Again, as I said, 15 million. Last 2 years, interest earning has been going up and up. So that's one of the reasons why general fund all the way up went up. Next slide, please. Fund expenditures increased by 294. So again, before everybody just jumps in, I just want to explain why expenditures is gone high in general fund compared to prior year. Because the prior year, we were able to use some of the ARPA money. And we want to make sure we use the ARPA money. So that decreases the general fund expenditures, particularly public safety, welfare, and we were able to use most of the ARPA money. So that's one of the reasons. And this year, obviously, it's a general fund is taking that. Okay. Again, the second bullet is just an opioid settlement. And again, that's working in our favor. Every other day, every week or every other month, I get an email, National Opioid Settlement Administration. Some other settlement is going on, and we are still getting money. So, and this is some restrictions.
Just me.
Go ahead.
Thank you. Through the chair, I do have a question around that bullet. So what we're spending right now in terms of expenses for opioids, are these recoverable expenses if we get the settlement dollars back in? So say for instance, I'm going to use fictitious numbers. We're spending $10. when this settlement is, I guess, when we get the decision on the settlement, will we recover what we're spending for this opioid crisis that we're in?
Oh, okay. So the way it works is, remember, I think there's a class action lawsuits or
Yes.
something. We're going on Kroger, Myers, I don't know how many pharmacies, as well as some of the manufacturing, Johnson and Johnson. Those settlement comes in, right? And county is part of that civil, whatever you call it, class action.
Mhm.
So when they settle that, we may have a consultant or somebody, I don't know. They'll say, hey, here's the county's portion. So we just get money up front.
Oh, okay, okay.
Yeah, we don't need to submit anything, no reimbursement, nothing. We got money up front.
Thank you.
Okay.
Marcy.
And add to that, the county has received some settlements and there's still some outstanding, correct?
Yes.
Yeah.
Yes.
Okay, thank you.
And this is, I think, going for next 18 years. So we have a schedule for next 18 years, actually. So yeah, that's a good chunk. I mean, again, but this is not a free money. We just can't use for anything else. There's something, so always there's some tie with this. Yeah.
Thank you.
Next slide, please. This is a debt. And again, we are very disciplined as far as our debt, so to speak. So, I'm going to spend a little time on that. First bullet is 827 million. So if you really look at that, compared to an assessment value and taxable value, which is going up. So we can't do a 10% of our assessment value. We can have a debt of 8 billion, but we have only 827 million only at this point. And again, those two bonds, the second bullet is our CJC bonds, 2018 and 2020. Those are bonds, just I listed, those are MFA bonds. And then the third bullet is just a debt increase by so and so. But what I would like to emphasize is the bullet number 4, that our rating literally has gone up. And I think I have a meeting next week. Last week we did a presentation with Moody's, and I think we are meeting next week around 18th or 19th with Moody's again. And let's keep the finger crossed. I think we are expecting one notch up again. And again, I'm saying we are expecting. So that's again good news. Continuously for last 10 years, I think we got almost 12 to 15 increases. So we are pretty much on a kind of an A category at this point. And the last bullet is I'm just going through that north branch, Big Swan Creek. I think we are just finalizing that. I think it comes around a 9.2 million. I just got the document yesterday. But again, this is county, is part of like 85%, then Monroe County as well as Washtenaw County. They all are part of this drainage district. ARPA, next slide is ARPA and SLURF, and unfortunately, our grants director is out on medical leave. I'll try my level best. But what we have, total commitment and spend to date and remaining to spend, that's what we have right now, still 86 million. Remember back then, we have obligated everything by 24 and we have to spend everything by December of 26. I think I'm sure Marcy did a presentation last week in a budget sensitive. I think same amounts were there, right? If any more details, if we require, I can certainly get it from the grant and compliance department. Yeah.
I can just add, in our budget sensitive report, we have a detailed schedule of the $339 million. So we'll get into that when we do our presentation, but it's also in our report.
Right, and all the projects are listed too, right? Okay, thank you, Marcy.
Commissioner Olson.
Thank you, Madam Chair. On the remaining amount to spend, is that 86 million?
That's correct.
So
Commissioner.
we have to, obviously we have to spend that by, we got was about December 31st, right? 2026.
26, yes.
So I think, Marcy, you indicated that we already had, we had the projects lined up that we were gonna expend these monies on.
Yes, in our actual budget sensitive report, we list the batch one and the batch two projects which are primarily the $86 million. And we do have a recommendation that they report back to the commission on the status of those projects so that we can make sure they're spent by December of 2026.
Okay, so we're gonna obviously get a look at that.
Yes.
Okay,
Mhm.
so is there any way that we are going to repurpose some of these funds? Or other opportunities to,
When we get into our report of the 86 million, those would probably be the batch one and the batch two projects. So they're already designated to the projects. But I believe there is, which is not part of the December 31, 2026. I believe there's about $39 million of general fund capital projects money still remaining. They can be allocated to projects.
thank you. Thank you very much. Thank you, Madam
Thank you,
Chair.
Marcia. Thank you, Marcia. Next slide. Next slide, please. Okay. This is about our 25 budget, which right now budget hearing is going on. What we picked up the number for, I would say a few weeks back, and hopefully these numbers are still good. If it's not, I'll be glad to correct it because we already have a CEO budget out there. So general fund budget, again, 783 million. We are increasing from last year, 16.6 million. What about general fund? General fund, 483 million. And revenue sharing, 64.7. But what I'm hearing now, because state has passed their own budget too, I think 2 weeks back or 3 weeks back, something. And I think I'm hearing that there could be some cut in revenue sharing. And our two guys from our financial planning and analysis, they're constantly looking at those economic factors to make sure, what could be impact, could be a 5 million less, could be a few million less. So we don't know at this point. But I would say we have a healthy general fund balance at this point. Mhm. Okay.
Yes,
Good.
Commissioner Clayton.
Just to clear up any uncertainty, this is the fiscal year 25-26 budget or the fiscal year 24-25?
No, 25, 26. I'm sorry. No, I'm sorry. Because ideally this presentation was supposed to be there a few months back. So what we were saying is 25 budget, yes. So yes,
next year's budget.
64.7, yeah, right. 64.7 million that we are expecting in fiscal 25, which is correct. I think there's no cut at this point, as far as I know. Mhm.
Just being certain here, it's the 25-26 budget that we haven't approved yet.
No,
This is the
I'm sorry.
current year,
Current year,
The current year.
24, 25.
and I don't
I'll make-
believe the state has finished their budget yet. We've had the House pass a budget, the Senate pass a budget,
Still waiting on.
and now we're waiting. So when you say under the third bullet point, what we're expecting in revenue sharing, is that for this current year or
No.
is,
No, that's going to be what I made a comment. Let me
Yeah.
correct that comment is for 25, 26 budget.
Yeah.
So this is what we are representing. And like I said, if this could have been like few months back, then it could have been correct. We are almost in a September month, right, for this budget. So 64.7, yes, I think we realized the last payment we received end of August because we receive every other month, even month revenue sharing. So we already got the last payment in 31st August for this fiscal year, 24, 25.
Yeah.
So I'll be glad to
what
give
you're
it.
saying in the third bullet point is we're kind of expecting 64 million
That
in next year's budget, but that's not in stone yet.
no,
So that could alter our budget.
no, so I'm sorry, let me correct this. This is everything is 24, 25. I think we already received 64.7 and I'm going to check it out again.
Oh,
August.
okay. All right. That's why 2 months ago you weren't
Right.
sure if it would all come through.
Correct.
Okay. All right. I just want to, because usually with that you know, talk about the 24-25
Right.
budget and talk about the 25-26 budget.
And I
So I just
believe,
want a clarification.
and Commissioner, I believe, don't get me on a number, but 25-26, I think around 68, 69 we budgeted, but now we are realizing, you know, it based on the states, what's
Yeah,
going to
yeah.
impact. So,
Right.
all right. Last bullet again, this is the state marijuana excise tax. It's working out a little well, 5,025,000. And I'm sure it's going to increase from, it just increased from 24. So I don't have a number for next year's budget.
I believe Michigan is #1 in sales nationwide. I believe so.
Commissioner Peterson, Mayberry.
Thank you. Thank you. Through the chair, is this?
Oh, you turned the microphone off.
Okay, thank you. Through the chair, is this 10% tax on top of the 6% sales tax for marijuana? And does it apply to recreation and medicinal? Do you know?
I don't know the details.
Okay,
I don't know the details.
Okay.
I can certainly get it to you
Okay.
details.
that'd be helpful.
And
Yeah,
we-
because I know there's this Michigan Regulation and Taxation of Marijuana Act. And so there's this baseline of 10% being applied on top of the 6% sales tax. But I don't know about if that's recreational and medicinal or just recreational. You couldn't get the answer to me.
Yeah.
Thank you.
And certainly I can give it to you. And also we get a schedule from a state,
Mhm.
right? Each and every city, each and every county, you know, what they are receiving. This one too.
And just one follow-up, Madam Chair, and I guess that's my question, because to the point that, whatever city or county is the most lucrative in this, is there a weighted formula as to how it is dispersed? Kind of like, or is it one equation across the board for every county, every city getting the exact same amount, or is it weighted?
I think there's some formula. I just can't recollect now, but I think they say, you know, how many stores are there or how many units are there. There's some formula that I can't recall
Okay.
that, but I can certainly.
I
look into-
appreciate that. Thank you, Madam Chair.
Okay, next slide, please. This is just enough graphical presentation. Again, it always shows, you know, what our major revenue source are property taxes as well as operating grants. I'll just highlight those two, 34%, 30%, and other revenues and grants. So, okay. Can we move to the next one unless somebody has a question on this one? Expenditures, again, governmental side, general government is on 18%. I mean, I always highlight general government, public safety, highway and street. And that's about it. Yeah, health and welfare. Those are our major functional expenditures, so to speak.
Commissioner Peterson, Mayberry.
Thank you, Madam Chair. One quick, is that economic development too? Community and economic, is that economic development where it's only 1%?
Yes, yes.
Relatively small.
Yes, Commissioner Clayton.
It's driving me nuts. So I'm gonna have to ask you one more time.
Sure.
This is labeled as fiscal year 24. So
That's
does that mean the current year, 24-25, or is this the previous year?
Everything based on
Because
what
on your next page, it shows head count as of September 30, 24. So that's last year's. Am I doing that right?
that's correct. So everything based on our published financial statement that we submitted to the state, September 30th, 2024.
Pie chart is great.
Thank you.
Thank you, man.
Thank you. And next one is head count. Right. So this is where a little tricky. Head count is there again. We picked up September 30th, 2024. we dealt with the two systems in PeopleSoft and Oracle because we went live in July 1st, I believe. So July 1st, 2024. And we made enough notes on that, why there are certain variances, and we're still working with our Oracle because if it's staff augmentation folks, a lot of folks are working, right? They're not part of the budget, but it's part of a contracts. They're using a positions, particular one, and it's got in there or it's not getting in there. So we're just trying to work with the PHR on this clarification, but this is the best thing we can came out. We were trying to reconcile these numbers, actually head count. I would say 90% is correct, but one or two, like judges, right? Judges are part of state of Michigan. And I think there are some partial social security is paid by us, partial is paid by state. Right. Yeah. So those kind of some of the variances are there. And that's why we made a note on that. If need any more information, I'll be glad to dig in.
Okay, next, Marcy.
I could just add to that, the variance too for the commission, there's more actual than budgets because the budgeted doesn't include the commissioner's legislative aid. So that's why there's no
Okay.
discrepancy there. And project consultants.
Okay. And plus, one more comment I would made. We had a new department, right? Juvenile and youth services. And this budget was done way before that, back then, right? So hopefully in this current fiscal year, 9/30/25, we have a much better, clear picture on this one. Okay.
Right.
Okay. Next slide, please. Okay, this is just coming out of our ACPR. Just a comparison of 2 years. This is a strictly general fund. As you can see, property tax, 360 million, state sell tax, 63. That's a state revenue, basically. So we did realize exactly 63 million that Commissioner Killeen, when we were talking about that in slides about that budget, 64 million. So realization actual receipt is 63.290. Okay. Grants and contracts, and again, charges for services are kind of in a line with exactly what fiscal year 23 was, 18% up. Interest, again, 40 million. So total revenue, 727. And all we ended up with the fund balance, 419. So that's where coming back, it's a $30 million is a net increase compared to last year. Last year, we had a major increase, 83 million. And again, I will point out because we were using an ARPA funds for a lot of general fund expenses. Okay, next slide. This is what we went again, but this is again a nice table that we made it again. Non-spendable, assigned, unassigned, committed, restricted, and non. I'll be glad to get into more detail, but some of those reassignment, reclassification happens because of some of our, I would say, favorite topic is gas bees. When they try to come up with every year new gas bee implementation, we have to just comply. This year, and the last slide is there. This year, there are going to be two another gas bees that we have to implement. Any question on this one? General fund balances?
Oh, Commissioner Clayton.
No.
Okay.
I'm ahead of you on another slide.
Thank you very much. Key initiative and challenges. So, as you know, with this new system in Oracle, we are working on a lot of policy and procedures update too, along with. Some of the policies are back then 10 years or 10, 15 years. So we are working all along with the policy procedures, along with the system. And I guess way of doing a business might be a little different in Oracle because of the process. As we said, this is a cloud-based system. This is not the system we can modify, so to speak. If they make one change, that means it's change for every other client in the world. So this is cloud-based system, meaning that we just have to change our processes, the way we do business, versus in Jerry Edwards, that we have customized a lot of our how we were doing a business. So that might be some more challenges, but I think there's again training. In fact, starting today, there's a training too. There'll be enough training, there'll be enough supports, and so forth. So, but it's going to be challenging this year once we go live. So other challenges, another GASB 101. It's just, again, they're coming up with the compensated absences. We were just reporting back then. It's just an accrual in a full and say, nowadays we may have to gauge that who is going to, kind of quit or who is going to something. We just have to come up with some assumptions and we have to report this compensated absences, and we may have to put it into our financial statement. So that's something one or two consultants are working on that. So, but I'm pretty positive we should be able to come up with the right solution on that. Okay, and then third bullet, which is not here, but obviously new systems, Oracle systems, and job description, training development, and we are just trying our level best to get it Oracle guided learning, which might be if somebody's doing something and they have a question, that kind of question mark, like when you say Amazon, you can click there, they'll say step by step what you need to do. So that's what they are working on there. Like any systems I've been through, it takes 6 to 8 months, could be a year to stabilize. So we are all very hopeful for that. Yeah.
Commissioner Green.
Yeah, thank you, Madam Chair. This was the one. The Gatsby standards. Trying to remember my acronym. Government Accounting.
Governmental Accounting Standard
Standards
Board.
Board.
Yes.
That set the rules for how governments across the nation, state, federal, local, have to report their statements
That's correct.
and how they look.
Hmm.
And I don't know if it's the Auditor General or we're working with our fiscal staff. Could the Auditor General give an explanation at a future audit committee about what these two changes are? Certain risk disclosures. That sounds. Can the Auditor General handle that? What is the effect on our? Because sometimes these have a very large effect on our statements.
We can do that at a future audit committee.
That would be great. Thank you.
Okay.
All right.
Anything else?
Any other questions from commissioners? Any closing remarks?
Nope, just thank you, Yogesh, for the presentation, everything you do in M&B.
Thank you very
and your
much.
staff.
Thank you very much, all commissioners as well as Auditor General. Again, it's nice to work with very cooperative staff here. Okay.
Okay, great.
Mhm.
Thank you. Need a motion to receive and file this.
Is it just,
Oh, no?
is it the presentation?
Okay. Never mind. Thank you. All right, let's move on to our next item.
Item 1 under new business, forwarding the final copy of the Office of Legislative Auditor General's Consulting Report on budget sensitive issues / review of the county's annual comprehensive financial report for fiscal year 2024.
As stated, this is the Office of Auditor General's budget sensitive issues and the review of the annual comprehensive finance report. Anybody that attended the Ways and Means meeting last Thursday, this is the same presentation that was done at that meeting. This is the report we use to kick off the budget hearing. So we do it to Ways and Means. Then we also present to the Committee on Audit. And I'm going to turn it over to Vandy Otis and he's going to do the presentation.
Great.
Good morning again, Commissioners. So I have the budget sensitive issues review of the September 30th, 2024 annual comprehensive financial report. And the purpose and objective is to prepare a report for the Audit and Ways and Means Committees capturing budget sensitive issues which may have a budgetary impact on fiscal year 2025 to 2026 budget hearings and beyond. Our scope is May 1st, 2024 through June 30th of 2025. In the general fund, the revenues increased by 64.7 million, largely due to increase in property tax collections and higher property valuations and more user activity and public spending resulting from economic recovery from the pandemic and increase in operations which impact direct fee services. So we had an increase in property tax revenues of 13.3 million, an increase in interest revenue and rent of 14.8 million, an increase in state grants of 16.3 million, and an increase in charges for services revenue of 22.5 million. The expenditures increased by 294 million, primarily attributable to compensation adjustments, retention, recruitment bonuses, retroactive wages and fringe benefit costs, and capital outlays. Some expenditures were charged to ARPA funds in the prior year. And our impact action is commission leadership should request the administration submit an annual report analyzing the cost of delivering mandated services and proposing service fee increases as deemed necessary. And we recommend that this is done annually.
If I could just add to that, this is important because these are the fees that we charge our users, for example, for this food inspection program. I always use this as my example. We did an audit many years ago where they hadn't increased their fees in like 10 years. So when they finally increased the fees, it was a significant increase to the restaurant owners. So if the county goes and does an annual report of these fees and determine if you have to make small incremental changes, it's better than doing it 10 years later, significant increases.
About 10 years.
Mhm.
We haven't changed them since.
And the general fund balance increased by 30.9 million over the prior year. The majority of the increase is unassigned, as we went over under the Yogisha's presentation. Unassigned fund balance of 371 million and includes 23 million for budget stabilization consistent with the prior year. And our impact action is commission leadership to continue to monitor the general fund balance and amounts allocated for budget stabilization. And unassigned unrestricted fund deficits and deficit elimination plans. Unassigned unrestricted fund deficits decreased by 2.5 million over the prior year. The following funds reported a deficit as of September 30th, 2024. Victim witness of 947,000, raise the age of 159,000, Chapter 8 drains of 346,000, and central services of 1,750,000. Out of these, only victim witness required a deficit elimination plan be submitted to the state. According to the ACFR, the deficit will be eliminated as resources are available from the general fund. The deficit in Raise the Age Fund is a result of expenses incurred in fiscal year 24 and offsetting revenue received in fiscal year 25. The deficit will be eliminated upon receipt of those revenues. Deficits in internal service funds were a result of recording net pension liability and OPEB liability. Our impact action is to continue requesting periodic updates on the progress of eliminating existing fund deficits and notification of projected or potential deficits and causing factors.
And the key here is we want to eliminate any deficits and budget overruns before they actually occur so that we're not doing budget adjustments after year end.
So the one that we had to report submit a deficit elimination plan to the state. Why was that one required? out of all the other ones?
The others, the state has formulas as to when a deficit elimination plan is required. The others fell within the formulas that either had revenue that was going to cover the deficit. This is the only one that the state required
Okay.
per their formulas.
Any other question, Commissioner Kling?
Thank you, Madam Chair. And to the Auditor General, I took note of management's response to your impact action. Does that satisfy what you're looking for in terms of impact action?
Yes, if the M&B is going to submit the budget to actual projections to the commission on a quarterly basis, it would be allow the commission to determine when there's going to be a deficit. Yes.
So we've had that in the past.
We haven't, we had it several years ago. And I think we've had one report so far.
But it's not annual,
No, it should be at least quarterly.
because I mean, if they were reporting, then we wouldn't have.
Right.
I think we submitted quarterly, first quarter, second quarter, already, to this body. Third quarter, I'm going to check it out, with our financial planning and analysis, but we did submit it though now quarterly projection report. Last couple of years, I guess we missed it because of the transition of the staff and budget directors. And so,
So the Auditor General, you'll keep us informed that we're getting those quarterly and we
It-
won't have any deficits at the end of the year.
And I believe those reports would go through the Committee on Ways and Means, but we can also monitor also.
They go to Ways and Means.
Correct. Yeah.
Okay. Thank you, Madam Chair.
Okay, let's go to the next one.
County debt and bond ratings. As Yogis mentioned during his presentation, our ratings have been increasing. And the impact action item is continue monitoring of bond ratings and request the administration continue providing communications regarding rating changes or anticipated changes. Staffing shortages, overtime, and succession planning efforts. Employee head count,
Did you read the impact action for the bond ratings?
I thought you did.
yes,
Oh, sorry.
continue monitoring of bond rating. Okay. So staffing shortages, overtime, and succession planning efforts. Employee head count increased by 355 from fiscal year in 2023 to fiscal year in 2024. In fiscal year 2024, 75% of budgeted positions are filled as compared to 70% at the same time last year. The largest number of vacancies are the sheriff's office, the circuit court, and public services. Overtime costs. County overtime costs decreased by $900,000, totaling $34.4 million in fiscal year 2024. Actual overtime expenditures were over budget by $14.1 million. The Wayne County Sheriff's offices account for 58% of the total overtime costs. As of the end of 2024, per civil service position report, 1,164 of the 3,589 budgeted civil service positions were unfilled. The titles that have the largest unfilled positions were corporal, police officer, laborer, seasonal, and public service maintenance worker. I would just like to add some of the overtime costs were offset by the large amount of vacancies. Success planning efforts include implementation of Oracle Learning Module on May 1st, 2025 to support professional growth, integration of Open Sesame online learning platform with extensive content libraries to develop cultural competence and compliance skills, quarterly coaching and feedback provided by employees through Apex tool. And our impact action items are hiring and recruiting challenges continue across all county departments. Commission leadership should consider requesting the following. Continue a detailed and comprehensive compensation analysis, including pay and benefits for all positions within the county, starting with county mandated departments affected the most. A countywide what-if cost analysis of improved employee health benefit provisions, continued monitoring of reasons for voluntary employee departures, and the action taken to remediate recurring employee departures. Continue updates on the status of staffing shortages, progress of hiring initiatives, and their related impact on key county initiatives and mandated services.
And I could just add that the county has over the last several years taken steps to increase the hiring by increasing salaries, looking at benefit packages. But it's so important that we continue through this process because we need to be able to hire qualified individuals, but more importantly, be able to retain them individuals. And by retaining, by giving them the opportunities to learn and maybe advance their careers will allow them to stay. So that's all part of a succession planning process.
Commissioner Peterson, Mayberry.
Thank you. Through the chair and Marcy, to that point, and I know I raised it at the Ways and Means meeting, but to the point that you just raised, are we competitive when we think about the entire compensation package that we're offering versus other counties of our size? So obviously, we would want to compare apples to apples. So are we doing that? Because, you know, as we talk to employees, we're hearing that there is a disconnect when it comes to benefits and that impact. And so I think people are leaving or we aren't able to obtain that retention simply because of that portion.
And it could probably vary by department to department. That'd probably be a good question for personnel human resources when they come to the table. I know they've done a lot of compensation studies, but I think there's more that can be done.
Okay.
Commissioner Colleen and then Commissioner Wilson.
And Commissioner Peterson Mayberry, a couple of years ago, we were leaking county prosecutors like crazy to Macomb. Yeah, they were leaving here and going to Macomb for a hire, and that was a couple of months we were losing going out there. Now that has been addressed a little bit, but I think that's a question for the prosecutor in budget hearings to say, okay, how has that affected? Because as we know, she's very shorthanded. So it's been in bits and pieces. A little bit's gone up here, other places it hasn't changed. Yeah, thank you.
Commissioner Wilson.
Thank you, Madam Chair. With the number of vacancies that we have and that we're continuing to have, and I appreciate the plan that you just enunciated on how we're going to retain individuals for these very important jobs. But invariably, that hasn't been working because you can see we're still bleeding, if you will. So have we thought about how do we modify the plan that we have in place? Because again, unequivocally, it's not working. We're still losing people. We still have shortages. I don't need to mention any departments because you know the one that keeps kicking the crap out of me. But anyway, it's very important that we, again, that we hire people who are qualified and we retain them. But how do we continue to do the same thing over and over again and expect to get different results? There's something that's missing here. I'm not sure exactly what it is, but there's something that's missing that's created a big issue for us as a county and not being able to retain qualified employees. So how do we continue to exist as a county, a productive county, if we don't have the necessary resources, meaning people, to kind of push us forward? So I'm not sure if you can answer that, Marcy, but maybe that's better for the personnel director.
I can't overall answer that, but I say, would that be a good question for each of the departments as they come before, you know, what can you believe you can do to,
Okay. Thank you, Marcy. Thank you, Madam Chair.
Okay, let's move on to the next item.
Okay. Retirement system funding. 70% funding ratio at 9/30/2024. And this is in compliance with Michigan Public Act 202 of 2017. And that's consistent with the prior year. County contributions exceeded the required minimum by $14,321,000. Potential cash flow concerns per the actuarial valuation report. Planned assets at funding value are sufficient to cover 100% of employee contributions on deposit. 76% of future benefits to present retirees and beneficiaries. No funding is available to cover employer match obligations. The ratio of planned assets at market value to retiree benefit payroll is 8.3. This ratio indicates current plan assets are available to cover approximately 8 years of retiree benefit payments. Payments beyond 8 years are highly dependent upon future contributions and future investment return. Combined pre-2002 retirement liability. In July 2017, the county, Wickers, and the Wayne County Airport Authority entered into a retroactive MOU to memorialize the Wayne County Airport Authority's 10.25% share of retirement obligation for individuals employed by or retired from the airport prior to 2002. When the airport became an authority and assumed operational jurisdiction of DTW and Willow Run airports, the MOU obligated Wayne County Airport Authority to make payments totaling $22 million over a 5-year period ending September 30th, 2020. After which time the three parties would come to an agreement for settling any remaining unfunded portion of the liability. As of September 30, 2020, the Airport Authority's unfunded portion of the combined pre-2002 retiree actuarial accrued liability approximates $6.3 million. The county, Wickers, and Wayne County Airport Authority have not come to an agreement on how the remaining liability will be settled. For payments, no payments were made by the Airport Authority in fiscal year 21 to fiscal year 24 to fund the airport's portion of the pre-2002 retiree liability. And our impact action is that the commission leadership should request management's plan to resolve the outstanding retiree obligations due, if any, from the airport for pre-2002 airport retirees.
And management indicated they're going to begin discussions with the airport authority.
Yes. After presentation with Ways and Means, I brought this issue to our CFO, and they said they are working on this negotiation. I don't know what the level is, but they are working on that. Thank you.
Okay, Commissioner Colleen.
Thank you, Madam Chair. Going back to the bullet points on slide 9 here. Per the actuarial valuation report, there's potential cash flow concerns. Where does that stem from? And how serious is this?
You're always going to have cash flow concerns unless the system is 100% funded.
Okay. And then what's the, because usually like 80% is like the magic number that a lot of folks use. But I guess we're driving towards 100.
Correct.
So what is the no funding available to cover employee match obligations? What does that mean?
That's based on the 70% funding level. We're talking about the future benefits too. So we don't, what's in the system now is not going to 100% cover all the retirees. So that's why you need to work towards 100% funded.
Employer match obligations?
The county does matches on some of the retirement system. Like
Okay,
401.
so it's all a result of not being 100%
Correct,
funded. Okay,
correct.
thank you, Madam Chair.
All right, let's go on to the next.
Okay, the delinquent tax revolving fund. 48.2 million increase in total fund net position over the prior year. 275 million at 9/30/2024, and it was 227.5 million at 9/30/2023. 10 million decrease in transfers to the county's general fund. In fiscal year 23, the transfers were 30 million. In fiscal year 24, the transfers were 20 million. Surplus transfer is expected to continue to decline in future years. The cash and investments plus expected future tax collections, 489.9 million, are sufficient to cover more than 100% of the outstanding delinquent tax notes of 199.8 million, leaving over 290.1 million to cover any remaining obligations in the DDTRF. And our impact action is commission should request the development of an agreed upon formula for calculating surplus DTRF funds that can be transferred to the general fund. With the known surplus identified prior to preparation of the annual budget, included in the annual budget, and finally transferred to the general fund for said budget year.
So so it says the Wayne County Treasurer's Office is required by the commission to provide. Oh, sorry, I'm reading the wrong thing. So MNB agrees that there should be a formula. Is that correct? Does the treasurer agree there should be a formula? Do we know?
This has been a discussion for many years now. Because at one time there was like $200 million in the this is a long time ago, $200 million in the delinquent tax revolving fund, because under prior, they were going to try and self-fund the delinquent tax. Now, what happens is whatever the treasurer declares the surplus, and then the surplus is sent over to the commission appropriates it. But it's a matter of determining what the actual surplus is. There's a lot more that goes into it now because you have the Raffaelli case, the lawsuit, which in the years ago, whatever was the taxes and penalties, all when a property went to auction, all the auction proceeds, taxes and penalties all went into the fund. But now property owners are allowed to, prior property owner is allowed to recoup some of the difference between what they own in the property and what the auction. So there's a lot more that goes into trying to determine what the surplus is, but if there could be some type of agreement is how it comes together.
Mhm.
But I believe the treasurer indicated when he was here yesterday, they're looking to transfer $20 million for 20.
That's correct.
Mhm.
$20 million for the 25-26.
And
Yes.
eventually, as long, when people are paying their property taxes, your delinquent tax revolving fund should decrease, which is a good thing. People are paying their taxes and you're no longer accumulating the administrative fees and penalties. So yeah, that's all I can say.
Commissioner Kleen.
Thank you, Madam Chair. Yeah, this has been an evergreen for sure. We've been talking about this for as long as I've been here, a couple of decades. Now, state law says that surplus funds in the delinquent tax revolving fund are to be forwarded to the county for their general fund. And that's been the argument. How do you determine what that is? And we've been going back and forth. Now, one time the treasurer was telling us that the DTRF was going to shrink a lot. And in future years, there wouldn't be, because if we go back 10 years, Marcy, how much was transferred out of the DTRF surplus funds to the county budget?
It ranged anywhere from 0 to maybe 50 million. And at one time, there's a huge transfer. It was over $150 million. But that's because they had been accumulating that money from the
Right.
reserves.
That catches the public's eye.
Mhm.
And then it's like, well, the Wayne County is balancing its budget. They want people in delinquency. They have a larger DTRF, and that's how we can, through those transfers, artificially, in some people's mind, support the county budget, and we shouldn't be doing that. Now, I'm in wholehearted. We have to sit down and talk about this because obviously the treasurer has some sort of formula in mind to say, okay, this is what the surplus is this year. But I think the county has an intense interest in how that is calculated. And I think we do want to avoid, funding county government through people getting foreclosed on. And, so
And just to add, there are reserves.
do we need uh, ordinance from the commission to, um, sit with the, I'm looking for a weapon to sit with, the treasurer and say, okay, we have to work this out. Because we do this year after year after year. If I go back and look at your budget reports from previous years, it's going to be the same recommendation going back 10, 15 years. So I think we ought to look into what kind of tool we have, to get the, treasurer to sit down with our folks and say, okay, right, here's what it is. These are the trends in how many people are behind on their taxes. I don't see that in here anywhere. Um, and I don't want to keep looking at this year after year. So does the
Not s-
auditor have an
Not
idea?
speaking for the treasurer, but I think right now the issue is there's money, I think he mentioned $115 million in reserves yesterday. And until the lawsuit cases are settled, it goes to the pre-lawsuit determine how much they have to pay back to those homeowners. I don't think we can actually.
Right, that's another factor here.
Yeah, that's part of the factor right now, because they get the pre-lawsuit cases that they have to settle and how much they owe those homeowners. Going forward, it'd be easier to determine with the current ones, but you gotta, I think he said there were 6,000 of them yesterday. So
Well,
there's a lot.
we don't see is we talk about this, right? What we don't see is we have an agreement where we say, okay, treasurer, what are all the factors going into it this year and what is your surplus going to be? And they enumerate out all of these things, right? Well, we got this, state of Michigan took some action and maybe we have, some more people to pay back. But to have some sort of report that this is how it's calculated. Because again, I believe it's the Constitution of Michigan. It could be a law, but I believe it's the Constitution that says surplus funds, from the treasurer go to the county, general fund. And yet we have no way, somehow the treasurer is calculating this amount, but the public itself has no way of knowing, right, whether true surplus funds have been coming back to the county general fund per the Constitution. So I don't know if I don't want to see this year after year. So I don't know if an ordinance is what we need to do.
Commissioner Kling, could I ask, is Commission Council on Zoom?
Good morning, I am.
Hi, can you answer Commissioner Kling's question?
So it's state law that requires the
State law.
surplus to be deposited into the county's general fund. There's been a question regarding how that surplus is determined and what even constitute a surplus. Commissioner, I know you've mentioned an ordinance in the past and it's something we can look at. I'm not sure from a legal perspective how far we can go with such an ordinance, but it's definitely something that can be discussed. I thought at one point the treasurer and M&B and Terrence, maybe you recall that they were going to sit down and try to work out a formula or something.
Yeah, we had a
and I don't
committee.
know whatever happened to that because I thought that was in conversations a year or two ago.
Mhm.
Maybe, let's put that on, yeah, I'll put that on on an agenda for a future meeting.
That is correct. We set up a committee
Let's-
2, 3 years ago. I thought the Auditor General was going to be involved in that to determine these costs. And then
All right,
after a
we'll
couple of
we'll
months, it
follow up
just
on
disappeared.
that. Okay, we'll follow up on that.
I do believe the lawsuits
Okay.
at that time had a lot.
Oh,
to
maybe
do with
maybe
that,
that's
yeah.
why.
It could have been, but
Okay,
again, we made no forward progress.
okay. All right, in the meantime, let's move on to our next item on this report.
Tax reverted properties transferred to the land bank. In 2023, the Wayne County Treasurer's Office and the Land Bank renewed their IGA intergovernmental agreement, wherein the Wayne County Treasurer's Office will transfer certain tax reverted properties to the Land Bank. The Land Bank agrees to obtain title and to demolish, manage, maintain, and market properties in exchange for per property amount paid by the Wayne County Treasurer's Office to cover maintenance and administration of the properties. The most recent IGA expires May 1st, 2026, but may be extended for an additional 3 years. Under the new IGA, the per property allocations increased. Since fiscal year 2018, the Land Bank has recorded a combined total of 3.2 million of receipts from the Wayne County Treasurer's Office for property maintenance and administration. Expenditures incurred against this amount total 2.8 million, leaving 321,000 of revenues in excess of expenditures that have not been spent by the Land Bank as of September 30th, 2024. And our impact action is the commission should request the disposition of excess maintenance funds that are transferred and not expended in a fiscal year, and need for the treasurer to transfer funds at the current rate. The commission should inquire if the method of transferring funds from the Wayne County Treasurer's Office to the Land Bank is appropriate.
If I could just quickly end this properties that are being transferred to the Land Bank, these are the properties that did not sell at the second auction. Okay.
The Guardian Building and First Street parking deck. Guardian Building experienced a net operating loss of 467,000 in fiscal year 2024, primarily attributable to increases in expenses related to repairs and maintenance, insurance premiums, administration, and electronic and janitorial services. For fiscal year 2024, building occupancy rate is 88.3% compared to 87.5% in fiscal year 2023. Amount of unpaid rent decreased from 157,000 in 2023 to 148,000 in fiscal year 2024. First Street parking deck holds a total of 1,451 spaces, of which 1,385 were in use at the end of fiscal year 24, a decrease of 240 spaces from fiscal year 23. The variance between leasable spaces and total usage is due to common practice of overselling parking spaces to account for vacancies resulting from remote work. And our impact action is that commission leadership should request that the Guardian Building monthly operating reports are forwarded to the commission for review to allow commission leadership to monitor revenues, occupancy rates, delinquencies, and spaces leased. Implementation of the Enterprise Resource Planning, Connect 43. Implementation of Connect 43 continues throughout 2023 and into 2024 consists of 3 components. The Oracle HCM, which is the Human Capital Management, Oracle ERP, the Enterprise Resource Management, and Oracle EPM, the Enterprise Performance Management. The project is estimated to go live in October 2025. Total budget for the project is 128.8 million. From fiscal year 2018 through May of 2025, the total amount spent was 87.4 million, leaving an estimated 41.4 million to complete the project. Our impact action item is the commission should continue to monitor the status of the ERP implementation and the county's progress as the system is rolled out. The state and local fiscal recovery funds, American Rescue Plan Act funding. In 2021, the county received 339 million in state and local fiscal recovery funds. Funding is required to be obligated by December 31st, 2024, and fully expended by December 31st, 2026. All funds have been obligated to various projects within Wayne County. 39.6 million balance remaining special accounts, general fund projects. Our impact action is the commission should Number one, request the annual Wayne County Recovery Plan Performance Report to review the status of amounts spent compared to the amounts allocated by project. Number two, monitor the 117.9 million allocated for public health funding and employee benefits and compensation enhancements. And number three, monitor the status of the remaining 39.6 million in the special account general fund projects account.
And if I could just add to this, if you go to the actual report we had on page 21, there's a really detailed schedule that shows all the projects. We had the batch one and batch two. Batch one and batch two was $159.9 million. I believe the M&B presentation said about 89 million. I'm not sure if the whole 89 million that's been spent was part of this 159, but the 159 total is what needs to be spent by December 31st, 2026. And then the $39.7 million, that's special account general fund projects that don't have any time stipulations because they were transferred to that fund.
Mhm.
But commission would want to have input into how that money is going to be allocated.
Okay.
Just got the last one. That's one's a quick one.
Oh, do we have one more?
Yep.
Oh, sorry.
All right. Fiscal year 24 Act and single audit findings. The county's fiscal year 24 annual comprehensive financial report and single audit contain 15 findings. Out of the 15 findings, 14 are financial statement findings and one is related to a federal program. Of the 15 findings, 14 are considered material weaknesses and one was considered a significant deficiency. 7 of the 15 findings were repeat findings. Our impact action item is the commission requests periodic reports from M&B regarding corrective actions to address the noted findings, especially those repeat findings that could have an impact on the financial statement preparation, involve reporting requirements, and adherence to the uniform guidance. And in conclusion, we believe that the county's financial condition is continuing to move in the right direction. Fiscal 2024 saw an increase in revenues, continued business expansion, and lower unemployment rates, all indicating economic recovery. The county still faces many challenges, particularly in the area of obtaining adequate staffing and employee retention, necessary to fulfill obligations due to county constituents. It is our hope the commission finds the information in our report helpful in preparation of the fiscal 2026 budget deliberations process. And this concludes our presentation.
Thank you so much for this very thorough report. We do have a lot of follow-up to do on this, but Marcy.
And if I could just add, all the items that are in the budget are in the impact statements. They'll be transferred over to fiscal and included for consideration to the budget instructions.
Excellent. All right. Can I get a motion to receive and file this report?
Good job.
Support.
Been moved by Commissioner Wilson, supported by Commissioner Colleen. All those in favor?
Aye.
Aye. Anyone opposed? Anyone wish to abstain? Motion passes. Okay, next item, Madam Clerk.
F, such other matters as may be properly submitted before the committee.
Are none. Next item.
G, public comments.
Anyone here wishes to make a public comment to the Committee on Audit? You're in person, on Zoom, or on the phone? Any emails?
No emails were received.
Okay, if you're on Zoom or on the phone, you can just unmute yourself. Second call for public comments. Excuse me. Last and final call. Last and final, I guess that's redundant. Third and final call for public comments. All right, hearing none. Next item,
Adjournment.
your motion to adjourn. That's been moved to